What if I told you that your retirement savings could drop by 30% virtually overnight? That's exactly what happened to millions of Americans during previous market crashes. And with new tariff policies sending shockwaves through global markets, another crash might be closer than you think. And today I'm going to reveal the exact strategies that the financial elite use to not just survive, but actually profit during market downturns. These are tactics most financial advisors won't share because they're too busy selling you the same old buy and hold advice. By the end of this video, you'll have a complete action plan to protect your wealth and potentially grow it while others are panicking. But first, if you want more financial insights like these delivered straight to your inbox, make sure you hit that subscribe button and ring the notification bell. Let's look at what's happening right now. President Trump's administration has implemented a series of aggressive tariff policies aimed at protecting American industries. While the intention may be to strengthen domestic manufacturing, history shows us that tariffs often trigger retaliatory measures from other countries. This trade tension creates a ripple effect. Companies facing higher import costs cut profit forecasts. Investors get spooked and start selling. Markets decline as sentiment turns negative. Economic growth slows as businesses delay investments. We've already seen the early warning signs in certain sectors. Technology companies with global supply chains have started reporting disruptions. Consumer goods manufacturers are warning about price increases. And the market volatility index, what some call the fear gauge, has jumped significantly. Most financial advisors will tell you to stay the course during market turbulence. And while that might work if you're 30 years from retirement, it's dangerously inadequate advice if you're planning to retire in the next decade. The math is brutal. If your portfolio drops 50%, you need a 100% gain just to break even. And history shows that recovery can take years, time you might not have. Instead of passively watching your wealth evaporate, here's a 5-part strategy designed to weather the storm. The first step is moving your assets to sectors that historically perform well during trade conflicts and economic uncertainty. Consumer staples. People still need toothpaste and food regardless of economic conditions. Utilities. Everyone needs electricity and water even in a recession. Healthcare. Medical needs don't disappear during market crashes. Select domestic manufacturers. Companies that source and sell primarily within the U.S. may actually benefit from tariff protection. What you want to reduce exposure to: import-dependent retailers, companies with significant overseas revenue, luxury goods manufacturers. Professional investors use hedging strategies to protect their portfolios. You can too. Inverse ETFs move in the opposite direction of the market, providing a cushion when stocks fall. Put options give you the right to sell at a predetermined price, essentially functioning as insurance. Gold and precious metals historically serve as stores of value during currency instability. Remember, these are protective measures, not speculative bets. Having liquid cash available during a market crash isn't just about safety, it's about opportunity. Keep 15 to 25% of your portfolio in cash equivalents. Ladder short-term treasury bills for safety and liquidity. Set price targets on quality companies you'd love to own at a discount. When others are forced to sell at any price, you'll be in position to acquire valuable assets at fire sale prices. During market crashes, dividend income becomes incredibly valuable. Focus on companies with long histories of maintaining or increasing dividends during recessions. Look for dividend aristocrats, companies that have increased dividends for over 25 consecutive years. Consider preferred shares, which offer higher dividend priority than common stock. This creates a steady income stream regardless of market conditions, reducing your need to sell assets at depressed prices. Psychological preparation. Perhaps the most important yet overlooked aspect of surviving a market crash is mental preparation. Establish clear decision rules before the crash happens. Determine your risk tolerance and stick to your plan. Limit your news consumption to avoid panic-driven decisions. Focus on your long-term objectives rather than short-term fluctuations. Remember, markets have always recovered eventually. The biggest danger isn't the crash itself, it's making emotional decisions during the crash. Let me share what worked during the 2008 financial crisis. Investors who implemented these strategies not only preserved their capital, but managed to grow it significantly during the recovery phase. One particularly effective approach was strategically buying into stable companies that had been unfairly punished by market-wide selling. For example, companies like Walmart and McDonald's, businesses with strong cash flows and essential products, dropped significantly less than the broader market and recovered much faster. Here's how to implement this strategy immediately. Create your shopping list of quality companies to buy during a downturn. This week, analyze your current portfolio for vulnerability to tariff impacts. Establish your cash position and identify potential hedge instruments. This month, gradually shift allocations to defensive sectors. Implement initial hedging positions. Next quarter, fine-tune your income-generating investments. Review and adjust hedging strategies based on market conditions. Practice your psychological preparation techniques. Market crashes triggered by policy decisions aren't new. They're recurring features of our economic system. What separates successful investors from the crowd is preparation and strategic positioning. By implementing the 5-part strategy we've discussed today, strategic reallocation, protective hedging, cash positioning, income fortification, and psychological preparation, you'll be equipped not just to survive the coming market turbulence, but potentially use it to strengthen your financial position for years to come. If you found this information valuable, don't keep it to yourself. Hit that like button so more people can discover these strategies. And if you want to stay ahead of market developments with more in-depth analysis like this, subscribe to this channel and hit the notification bell. I release new financial insights every week. For those who want a downloadable checklist of the 5-part crash survival strategy we covered today, check out the link in the description below. Remember, financial storms don't destroy all ships, just the unprepared ones. Get prepared, stay calm, and you might find that what others see as a crisis becomes your greatest opportunity. Thanks for watching, and I'll see you in the next video.